Welcome to another episode of Building Beauty Billionaires. I'm your host, Tiana Shate of Beauty Mogul CEO. I want to just introduce everyone. This is Money Maven of Money Maven Club. She's Shaniqua Nicole. She's a tax and wealth strategist, and she's based out of Atlanta. And I'm going to ask you to go ahead and tell us a little something about yourself whenever you're ready.
Yes. Thank you so much for that introduction.
No
So as you said,
problem.
Shaniqua Nicole, I am an accountant by trade. So I've owned an accounting firm for probably about 13 years now, definitely over 10. I never can, I lose count, right? I barely know my age sometimes.
I know, right?
I have to think about it a bit.
Like
But
22?
right.
Right.
On that one. But no, so I've owned an accounting and financial advisory firm for a long time. Come from an institutional investment corporate background. So I've worked for like Merrill Lynch and Hewitt, and had my tax business just on the side, really, to make some additional income, because what I did know was that I couldn't work more than 40 hours a week, right? So I was salaried, and they weren't going to give me any more money, even if I did work more than 40 hours a week. So I started my little,
I get it, girl.
Side hustle, and here we are over 14 years later. I've got my degree in finance and have been building out my company for years, and have kind of turned into like a business strategist. So I do help a lot of new and growing businesses grow and scale. And really the idea is that we want to help you guys with your cash flow issues so that you can take the money from your business and start to build wealth for your family. So we help people save money through tax planning and strategy building, as well as developing some saving and investing guidelines for you.
Okay. Well, you definitely are an expert, because I don't know what any of that means. I say, okay, you know what? Here's my taxes. Here's my stuff. You say what?
Oh, gosh. I hate to hear that.
Seriously, no, I'm usually... And I'm saying, that's why I'm like, let me get you on here. I've been in the industry for 15 years, and I've been on my own for like the last 5. So once you start hitting that 6-figure mark, it's like, it's completely different. So I really want to talk about how taxes work for beauty professionals, servicers.
Yes, ma'am. Let's talk about it. Let's talk about it.
So what can beauty provide?
Let me ask you. How do you said you normally just drop off your tax documents. Tell me what tax year typically looks like for you when you're ready to file for taxes.
Well, I have a few businesses, so mine are a little bit different. And I also have partnerships. So mine are my file, and then I also have my personal taxes. So I've been, over the last couple of years, trying to find the perfect tax person, because the last one was a little bit weird, but it also was a little weird because we went through the pandemic and everything. So the year before that, I was physically doing lashes and things of that sort. So it looked a little bit different than last year, but last year I made a nice amount through other businesses as well. So I had to go a different way. So it was like, you're going to spend a little bit more bread when you're making a little bit more money. So that's kind of where I was. But I'm learning as I go, but I don't know a whole lot. But as a business entrepreneur, I'm learning as I kind of go, though. So I know about K1s and filing on time, and actually putting away quarterly taxes and paying that. But for anyone who's not, who's in the beauty industry, what can beauty providers write off? Let's start there.
So here's the thing about tax write-offs, right? And the great thing about being a business owner is that we are unfairly advantaged when it comes to the tax code. Government will incentivize you on the things that they don't want to do. So the government doesn't want to have to provide jobs for people, right? So they incentivize business owners to open up businesses so that we can hire people, right? And
Right.
for that, they get tax breaks. And through those tax breaks, you can make all the money you want and you can write off all the money that qualifies. I'm not going to say that you want, but you can write off all the money that qualifies to be written off. And and when you do that legally and ethically, it can really, really save you a lot of money. So as a beauty practitioner, I mean, there are many things that you can write off from, starting off from rent, of course.
Mm.
I know most people might start off from being in their home. You've got home offices. You can write off a portion of your rent if you have a room that's specifically for you to do work in.
Okay.
Of course, if you have some kind of commercial space, you'll write that rent off. Of course, there's marketing. So marketing expenses can be very varied. Marketing can be anything from t-shirts that has your branding on it to your website to let's say you provide promotional discounts to your clients or you provide referral fees to clients. That's considered marketing. You can sponsor a little league team in your town, right? So my son's on the local football team here, and they need donations. It's 100% charity based,
Mm.
right?
Okay.
Everybody volunteers. I donated $1,000, and it helps the kids out. It helps the league out, right? So I donated $1,000. It's a tax write-off for me, and that's considered marketing because I'm putting my business in front of the eyes of all the parents, and that's a tax write-off.
So what if you do
Um,
mobile? Like if you're a mobile stylist or something like that, what
Mobile
can you?
styling.
Hmm.
So mobile styling, of course, you're going to be able to write off all your supplies. You'll also be able to write off any kind of marketing expenses that you have. So yes, of course, your shirts, your uniforms, your not utilities, your flat irons, curlers, right? All of those things that you use for that. Supplies are going to be anything that you continuously buy,
Okay.
shampoos, combs, things of that nature. Travel. So when you're traveling back and forth to your customers' houses, you can deduct your mileage on your car. So there are two ways to get the biggest from your car. And I'm sure a lot of people might see a lot of marketing out there that says, oh, go and buy your G-Wagon, write off
Yeah.
your whole G-Wagon, get you a G-Wagon and write that off, right? We all want to do that, and it sounds great. Let me
Hmm.
tell you how you legally write off your G-Wagon. Number one, your business expenses need to be regular, necessary, and not not lavish, right? So what
Mm.
that
Okay.
means is writing off a G-Wagon for a celebrity, like let's just pick any celebrity. Who's your favorite celebrity?
Girl.
You're not
Well,
into you're not into
entrepreneurs are the new celebrities, so I would say myself.
listen. Girl, I will give you three snaps to that. I have one hand over here on the
Okay.
bottle. I got the baby over here with me.
All right.
But
Yeah. Girl,
yeah, I
I
mean
have no clue.
any celebrity that you want to pick. Let's say
Cardi
you want to
B.
pick
Let's say
somebody.
Cardi B. Let's say Cardi
Cardi
B.
B. Cardi B is rich, rich. Okay.
Mm-hmm.
So when Cardi B goes and buys the new Lamborghini Urus, 500, $600,000 truck, that is not a lavish expense for her because she makes millions of dollars, right?
Right.
It's also a necessary expense because she needs to drive around.
Right.
Okay. Now for so what that means for her business is that let's say she paid 500,000, 600,000 for this car, because that vehicle is over 6,000 pounds, she can write off 100% of the value of the car. So if she pays 600,000, she now has a $600,000 deduction that she can take in the business on her car, right?
Oh
Now,
wow.
for a
Okay.
person that's just making $100,000, a $600,000 car is lavish. It's
Right.
not necessary. It's not a normal expense. So
Hmm.
while Cardi B can write off a Lamborghini Urus, that might not be the same for you. So, you definitely need to talk to your accountant or financial professional to understand what's normal for your business and for your income level. But you can definitely, let's just say you have a normal truck, right? You drive like an Infiniti or Toyota, whatever. You can definitely write off expenses on that vehicle It's just done a different way. So there's a standard deduction that you can take for mileage. So you're going to track your miles to and from your clients. If you're a full-time entrepreneur, you can just take all the mileage, right, that you have in that year and use that. So let's say you have like 10,000 miles on your car that you drive. You can actually get a credit of up to a little over $5,000 from those 10,000 miles. So that's going to take $5,000 off of your taxable income if you keep your records in order. And,
Okay.
so the next point is, how do you keep records for your car?
Wait, hold on, because we got a question. We
Oh,
got
we
a
got what?
question. We got a question. Keisha Janae says, silly question. If you are just starting a business and haven't had any income yet, can you still write off things?
Absolutely. So any new bit, um, let me tell you what qualifies as a business. If you are operating with the intent to make a profit, you're considered a small business. So, a lot of people would say, oh, I didn't make a lot of money. I didn't make any money. So they won't claim the expenses that they spent in their business in that year. And the unfortunate thing is that if you don't claim them in that year, you miss out on claiming them at all. Right?
Oh, okay.
So definitely, if you are a W-2 employee and you start a little side hustle, you don't make a whole lot of money, you definitely still want to continue to document your expenses, because you're in the greatest position because you're already paying for your taxes through your paycheck, and working in your business with those expenses will help lower your taxable income that you get from your paycheck. And typically, you're
Okay.
going to see an increase in your refund.
Mm, okay, that makes
So
sense.
that, for me, when I first started my tax business as a little side hustle over 12 years ago, let's just say you make $50,000, and let's say you invested $10,000 in your business. Instead of
Mhm.
instead of being taxed on 50,000, you can now be taxed on 40,000. So it's going to lower your taxable income and therefore
Okay,
give you more money back, because your job is going to tax you at that $50,000 rate.
got you, got you,
So
got you.
you end up paying less taxes overall.
She says, thank you.
Yes,
That was
ma'am. Make sure
helpful.
you
That was
document those
helpful.
expenses, because it can definitely help put you in a better situation.
Okay. So how do we report now? I'm sorry, I had cut you off earlier.
Oh, no, you're fine.
So
How
how
do
do
you
we report? Hmm.
how do you report your income? So, as a new business or established business, you definitely want to have some kind of records. Number one, the first thing that you should do, I would suggest that you get an LLC, right? So you get your LLC from the state. The two things that this does for you is, it's going to allow you to have legal protection, and you're going to separate yourself from the business, especially as beauty entrepreneurs. You're working on people's faces, hair, anything can happen.
Hmm.
And you're opening yourself up to liability. So let's say you burn someone while you're working and they decide to sue you. If you have assets and you don't have an LLC, they can come after your personal assets.
Right.
So if someone sues you, they can now come after the equity in your home. They can come after your car. They can take whatever assets, your bank account, right?
Hmm.
All of that stuff is open to liability when you're out here functioning as a sole proprietor and you don't have an LLC. So the first thing you want to do is get your LLC, and second thing is get a business bank account. So you got your LLC from the state, you get your EIN number from the IRS, and get your business bank account. Your business really doesn't even exist if you don't have a business bank account.
Right. Yep.
Because the next step is going to be to start building business credit lines.
Hmm.
Everybody wants to tap into business credit and other people's money. But the first step in that process is getting your business bank account.
It's a
Um,
whole process, girl. It's a
oh,
whole
it is.
process. For real.
It is a process. Absolutely.
It
Especially.
is, and I will tell people now that it is not a DIY type of project, honey. Honestly, you can, but if you want a fast result type of situation, it is not.
the experts.
No.
People think everybody wants to DIY everything.
No, girl, you can't do that one. Nah, you gotta pay your coins for that one, for real.
You can do it, but you just have to know, you have to follow the process. Everybody wants instant results. And if you're better, if you are creative and you do hair, you're a makeup artist, you're probably not going to want to sit 4 hours in front of the computer.
Right, exactly.
I'm on the computer all day. This is what I do. I easily navigate through these things, and I happily do it. Right. So we
hire a professional.
Absolutely. Hire a professional. Please hire a professional.
Okay, we got another question.
Have a corporation or an LLC. So that will get into tax planning. Corporation is great as well. It really depends on the layout of your business. So, if you have children, if you have, and you want to put them on payroll, that's a tax strategy. Your corporation is going to be great. If you're running payroll, or if you other businesses and stuff like that. So, I won't say that one is better or worse, because it really truly depends on your situation, how much money you're making, all of that. Because with the corporation, there is a little more compliance that's required. So you have to have bylaws, you have to have meetings, you have to have documentation. So there's a little more compliance. And if you're super new, sometimes that compliance is not worth the time, effort, or for you to, keep a corporation legal. But the LLC, you do have to have documents in place for that as well. But, if you're the only owner, an LLC is a lot more easier to maintain, I'll say. So you get your LLC and separate your business and your personal finances, right? The reason that you have this LLC is for protection. So if you're using your business bank account to pay your personal rent, you're now piercing the veil that will protect you against loss. So you don't want to commingle
funds. Say
that
one more time for the people in the back.
When you have your LLC, you do not want to pay and spend money on personal items, because when you spend your LLC money on personal things, you're doing what's called piercing the veil. And what that does is it now opens your business to the same liability as a sole proprietorship, and you're no longer protecting your personal assets from loss, right? And
now, what you could do, though, is you could have a business credit card, and you could pay your personal bills or whatever from your business credit card and actually have it connected to your LLC bank account, and you could pay that way. But that's the only way that I know that's the legal way to do it.
Yeah, well, no, you're right, but is that, I have people all the time do that, right? And then I'm looking at their books and they're like, oh, I paid on my business credit card, so this is a business expense. You can do that, right? But is that a viable expense? That's going to be, it depends is the answer. It depends on the way you run your business, and it depends on the way you run your business, period, right? So if you're paying for your personal rent through your business credit card, right, you have to have some kind of business reason that you're doing that. So if you're fully operating out of your house, perfect. That makes perfect sense. But if you have rent that you're paying to a commercial space, and you're trying to pay your personal rent with your business credit card, then your personal rent is not a business expense, right? It's not a taxable business expense, so it's not going to come off of the bottom line. But, essentially you'll be using your business money to pay for it without piercing that veil. Yes.
Got you. Oh, while we're there.
So your business has two functions, right? The LLC and the corporation has two functions. For tax purposes and liability purposes. And those two things are totally separate, right? And people get them confused all the time. Liability purposes is that it's going to protect you from loss. But for tax purposes, all things that are liabilities to the business, aren't necessarily deductible from a tax. I don't want to get lost. I don't want to get lost in that.
Okay.
Let's keep it a little high level.
Gotcha. Well, I got a question though, because this is for my hood
Yes.
stylists and barbers or whatever, can you go to jail for not paying taxes?
Oh, absolutely. You can go to jail. It's called tax evasion.
Oh.
And very even worse than that is the IRS can go into your bank account and take your money. So here's
Mm.
the thing that a lot of people don't know about business bank accounts, and this is why people don't have them and they think that they're protecting themselves. So a lot of people will stay away from getting business bank accounts because they just don't know what it entails. But when you sign on a dotted line or click the button that says "I accept your rules,"
Mm.
nobody reads all the little print that comes along with
No.
it. And on every single business bank account, it says that the bank has the ability to close your account and freeze your funds if they find that you're not properly operating your business. So, nobody, no, I've never had a client, have to give financial statements to their bank, but it is in the fine print. And if they feel like it, they can, right?
Mm.
So if the IRS, triggers your bank and says, look, we need to freeze these assets, they have every right that they can do that. And you've already signed on a dotted line that, yes, I'm going to operate my business in compliance. Right. And so that means that you need some kind of bookkeeping. So that's what comes next is you have
Okay.
to figure out how you're going to record your income and expenses. Back in the day, my grandmother had a ledger in a book, and she used to write she used to write the income down on one side, write the expenses and the bills on the other side. That's considered records. So if
Mm.
you are just an old fashioned person and you like to have a written ledger, you can definitely do that. But we're in 2021, and there are many ways that you go about that. So a couple services I would recommend is QuickBooks Self-Employed. You can pay like $11, $12 a month for that. Connect your bank account to it and have an app on your phone. And so it's literally like Tinder or one of those dating apps. I don't know.
Oh,
I'm married.
okay.
I don't use them. But when you have an expense that shows up in your business bank account, the app will ask you, is this a business or personal expense? Swipe left for business, swipe right for personal. So
Oh,
it
okay.
makes it super easy. A lot of people are really intimidated by this financial stuff, so they just don't even do it. But it's
Hmm.
really, really not that hard. And the computers help us do what we need to do and not have a lot of knowledge doing it. So you can set your QuickBooks up, and it can guide you into figuring out are your expenses actual business expenses or personal expenses. Excuse the baby, he's back here having some.
Oh no, it's okay. I'm like, I know that
You can
cooing.
do QuickBooks. There's also another one called Neat. NEAT. I love Neat. Actually started out. I used to use them years ago to keep my clients' receipts. So the records that you need to keep for your expenses are your receipts, your contracts, anything, purchase orders, right? Anything that you have that shows exactly what you spent your money on. A lot of people think that you can use bank statements for that,
Mm.
and bank statements aren't going to get you through an audit, to be honest, right? Because you could
Okay.
go and spend $3,000 at Walmart with your business credit card, but if you don't have a receipt, you could have been at Walmart buying groceries, a TV for the
True.
house. You could have gotten tires for your car, right? So the IRS doesn't know what you actually spent your money on. So that's why you have to keep your receipts, your itemized receipts, because that's really going to prove that, what you actually bought is something that is necessary for your business. So you're always going to have to default back to, is this a necessary and a regular expense in my business for it to be, an audit proof expense?
Okay.
So you want to keep your receipts, and Neat is a service that will allow you to take a picture of your receipt. It literally reads all of the information on there. So let's say you went to Home Depot. It's going to take Home Depot as the vendor. It's going to take the total amount that you spent, and it keeps a log of that, and it'll start to kind of do your record keeping for you almost.
Okay.
So it's a double utility. It gives you your receipts, and it also gives you the financial spreadsheet that you'll need to actually do your taxes. So
I
someone
use a
says,
Wave.
oh, Wave is great. So Wave is a free app. I love Wave apps because it's free. And it's definitely great for solopreneurs or new businesses that want to manage your books on your own. It's not that flexible when, it doesn't do double entry bookkeeping. So it's not like a professional service, and neither is Neat, but it's a great way for you to manage your books on your own for sure.
Got you.
Yeah. And I think Wave actually payroll now, right? Do you do your payroll through Wave?
No, ADP. I still use ADP.
ADP? Gotcha.
Hmm.
Yeah, I use ADP too. So if anybody needs an ADP Connect, you can go on my website or, just shoot me a DM and I'll put you in contact with my ADP guy. I actually told him I was gonna plug him this week.
Look
So
at you. Look, she got
there.
an ADP guy and everything. Look, we got two questions. One was, how do I pay myself when I have an LLC?
Yes. So, if you're going to put yourself on payroll, you can pay yourself through payroll, just like we're talking about. We both use ADP, and you can pay yourself on payroll. You can also pay your children through payroll. So if you have children, that's a great way for you to save some money on taxes. You can pay your child up to $12,000 every year and not pay any taxes on it. So if you got three
Mm,
kids, you can save $36,000 in your business tax free and keep that money in your household, right? So
mm,
now your kids can stay out of your pockets
right.
when they have dance class and after school program. They can use their own money that's being paid from your business to their bank account. They can use their own money to support the things that you want to do for them, and that's going to be on a tax-free basis for you and for them as well. um, what I do with my son's paycheck is we just invest it because he don't need no money. He's 6 years old, so
Right.
we pay him his little 12,000 a year, and we put it in a Roth IRA. So you can put up to
Right.
6,600 in a Roth IRA, and this way you can start building wealth for your children. And literally, I mean, imagine if someone had put ten
Hmm.
thousand dollars in Nike stock for you when you were 5 years old, right?
Right.
And then it's 15 years later, you're 20, about to finish college, start your life off, right? If that grows at just a 10% rate, you're looking at least having over like 30, 40, $50,000, depending on how it does. So
Right.
definitely that is definitely a powerful tool, right? Paying your children through your payroll on your LLCs. But if you are a single member LLC, you actually don't put yourself on payroll, right? Because you and your business are actually still one from a tax perspective. So
Hmm.
from a tax perspective, unless you have elected to be an S corp, you and your business are still one. So when you file your taxes as a single member LLC, you're going to file your 1040, and your business taxes are a schedule underneath the 1040. Now, Queen Tiana here is talking about K1s and all that. That's next level, okay? That's when you're getting into your partnerships and your corporations. Then you pay yourself. So if you elect to be taxed as an S corp, you can do that through an IRS election with the Form 2483 and become an S corp. Once you're an S corp, now you put yourself on payroll, and then that's going to separate you from your. But while you're seeing your business are one when it comes to taxes.
You're dropping all the gems because I promise you, like the way that you're explaining this is very easy to understand. So I'm so excited. I'm happy that you are
Awesome.
able to talk to my community. I had someone ask, how long are they supposed to keep their receipts?
3 years.
3 years. Woo, girl, let me write that down.
3 years. So anything in your business, and now, guys, we've had all this government funding come through this year with the PPP loans, the EIDL. They actually want you to keep your records for 4 years. So, you want to definitely make sure that you have some kind of digital, you have this stuff kept in the cloud somewhere, right? Because they don't care. They don't care if your house burned down, your records got, burnt up, because if they're
They want
asking
their
you,
money.
they want their money. And if they're asking you for documentation and you can't prove it, they have every right to say, okay, well, this is now a disqualified expense and you have to pay taxes on this income. So, you want to definitely have some kind of record keeping that's digital that you can keep for years. That's why I really love Wave apps. I really love Neat. Neat is for receipts. So you scan your receipts and you have them forever, right? Like it creates this digital log for you and you can keep them really forever. You download the file, upload it to your Google Drive and just forget about it, right? And then if and when the IRS does come and ask you questions, now you have your documentation for it. And let me just, say a point to that. The IRS has been heavily investing in technology that is going to trigger a whole lot more audits coming up. That's for two reasons: so that they can collect more tax money, and so that they can help weed out some of these businesses that aren't really aren't properly structured and properly documenting.
Gotcha.
Especially with all the money, the government money that's been given out with the loans and all of that, going to become really, really important. What I did post, which is probably what you saw the other day, was bank accounts are going to be required to now submit information to the government. Now, back in the day, I started my career in banking. Back in the day, they didn't send a report to the IRS unless there were $10,000 or up transactions, right? So anybody in the industry would know, they know that. But now the banking and IRS, they're requiring that if you have electronic transactions more than $600, that you're now going to receive 1099s, meaning that information is going to go to the IRS and that information is going to come to you, right? And these are going to be for apps like Cash App, and I know barbers and hairstylists. That's your favorite.
Yep.
Who really carries cash? Who really carries cash these days? So Cash App is as good as cash, and people think that, oh well, this Cash App is just as good as cash, I don't have to claim it. In years prior, Cash App did not have to send any records. But now, going forward, if you have more than $600 in a year, not in a transaction,
wow,
in the year that goes in or out of these apps, they're going to be required to send this information to the IRS. So it's really
did that proposal, it already passed?
Yeah, so a part of it did pass through ARPA, which is the American Repair something. But when they were giving all of that government money out, they did pass the $600 portion of it, right? But here's the thing. So 1099s were already a requirement, but they just had higher thresholds. So like, let's say you use PayPal. If you did over 200 transactions or over $20,000 in volume in a year, PayPal is required to submit the 1099 already, right? So that's been in place, but now they're lowering that 200 limit, and they're also lowering the $20,000 limit to 600 because they know that more people. Yes, they know that more people, people are more likely to be making 600 than 20, right? But here's the thing: if a makeup artist makes $20,000 on PayPal and she's not reporting any income on it, the IRS isn't making any taxes. They're not making any tax revenue. So that's what they're trying to mitigate.
Okay, so do you think so basically they made this to not really attack, but more so kind of attack people who aren't paying their taxes.
Their
like
fair share.
A lot of the beauty industry doesn't do that because we accept Cash App, or we are even with Square. Like if you do Square, you will get a 1099 if you go over. I don't even remember, but I think that even last year when I worked for a little bit before the pandemic, I think I may have made like 15 in like a month or two. And they sent me a 1099 for that through Square. So they're just really just
Sometimes
trying to
it's
crack
based on
down.
transactions, so if you have 200 transactions, then they might do it. And for certain companies, they have the technology in place already. So it's like,
Hmm.
let's just go ahead and spit it out for everybody. But not every company has that technology, or has a team in place for it, so they weren't doing it. Look, Detroit Investor says government money always has a catch. Listen,
Okay. You know it is. You know they coming after that PP money, that EDL money, that all of that money. They coming after it for real. Unemployment.
absolutely. So the idea is that they put this money into our economy, and they wanted to stimulate to get dollars flowing. Like it means that money's supposed to be transferring hands, right? That's what money. That's why it's called currency, because it's supposed to
Mm.
move like water, and it's supposed to transfer from person to person, to entity, to business, to pay your rent. Then your rent owner pays their mortgage. Then the mortgage company pays their obligations, right? So money is supposed to continually be moving. And guess what? Every way of the chain, each person is taxed.
Yep.
And
Can't run.
this is just economics. This is how our country runs.
Hmm.
It's the same dollar, but that dollar is taxed when it comes to me. If I pay you to do my makeup, you now
Hmm.
have to pay taxes on that dollar. When you pay your mortgage company now has to pay taxes, right? But as business owners, the most expensive tax that we have is ignorance. And if you are, not trying to learn about these things now, you will be heavily, heavily paying for the ignorance tax when it comes time to file your taxes. And especially if you run into any kind of audits with the IRS.
Yeah, well, you definitely put a fire under me for real. Like I've learned a lot. So, like I said, I'm trying to get a little bit savvy or whatnot and learn the financial portion of like bookkeeping
Business.
and yeah, business
So you
finances.
tell me, what would help people in the beauty industry? Like, you know, people buy courses all the time, and I have a
Mhm.
course right now. My course is not for um for my course is more for financial professionals.
Okay.
But I do want to put something together that would support people that are just looking to learn how to become more financially savvy when it comes to these topics. So what can I do to help you and your community?
Honestly, I mean, I got a bunch of DMs with questions or whatnot. So I think maybe teaching people about how to do it properly. We're having this conversation about how to report. People are asking questions in regards to if they're writing things off. Okay, so like for instance, like what's the best way that a hairstylist can show a to purchase a big ticket item and writing off as a business. So these are questions that they're
Yeah,
asking. Is it better to have their clients pay in cash? So it's a bunch of questions that they're asking.
right,
And I think that is very important for them to know. And I don't think that they have the time to really sit down and really be like, okay, this is what I need to do. Like, we're
right.
busy, we're on the go all the
Absolutely.
time. So this is why I was like, let me pull you in, and I'm
Yeah,
gonna definitely save this. She said I need to work for Money Maven Club Learning for real. But yeah, I think that maybe like a membership or something like that
yeah,
where people can
yeah,
come
yeah. So
in.
do offer weekly calls right now. So you can go to the link in my bio, moneymaven.club, and register for the Money Mastermind, where we discuss these kind of topics. So if you're running
Mm,
into issues, it's a free call. It's kind of like my community service, right? I'm so blessed. So I just feel like I need to give back, and that's
that's
the way to
dope.
give back. So I host a call, and sometimes we're talking about things I want to talk about, and sometimes we're talking about things that the community wants to talk about. So, if there are pressing issues, right, typically somebody will bring it up, and then we can discuss whatever issues are happening. But of course, I have a firm where we can do the work for you,
Hmm.
but um, we're at this point we're only working with business owners, unfortunately. So if you don't have a business, I mean, of course, you guys are all business owners because you're you work for yourself. But we only are working with business owners, and it's a done for you service. We do try to educate, so once we do your taxes, we get your information, we let you know, hey, here's your spreadsheet. So if you're not using an automated service, at least use this spreadsheet to keep
Okay.
track of your income and expenses, right? And next year it'll be easier for us to work together. And then when we after we complete your taxes, we'll get on a call with you and we'll say, hey, here are some areas that I think you need to be looking at for this year. And maybe if you save more receipts, you'll be able to have more write-offs, right? Or if or this year your business blew up and now you're at 6 figures of net income, or even once my clients get to like 50, 60,000 of net income, then we start having tax planning discussions. And
Okay.
so tax planning is a year-long process. It's not something that you just, we're so used to just filing our taxes on by April 15th so we can get our refund, right? But I tell a lot of new entrepreneurs come into it thinking that, oh, I'm gonna start a business so I can get all this money back. You ain't getting no money back.
You ain't getting no money back. I'm gonna tell you that
Right.
right now. It's not happening. Once you
I
start working for yourself for real with an LLC and you got, man, listen.
right.
I remember
Okay,
first year.
go
First year
ahead.
I was an LL I had my LLC and I'm doing all these things or whatever, and I was used to working for corporate. And so when you
Hmm.
work for corporate, they take your taxes out already for you. But that,
Right.
man, I was salty when you had to pay the taxes instead. It's different. It's different. I was like, oh, my feelings hurt.
It's definitely different. And so a lot of new entrepreneurs like naively start a business. They're like, okay, I got my LLC. I'm gonna get all this money back this year. Sorry.
Mm-hmm.
Really, it's our work together so that we can figure out how you pay the least amount possible. But at the end of the day, like I said, money transfer hands from one person to the next, is taxed on every single level. So, it's your job to be, figure out what deductions that you actually do qualify for and make sure that you're maximizing those deductions.
How much does to hire an expert, or how much does something like that cost?
Yeah, so you can typically hire an accountant maybe on an hourly basis for like 250 an hour, 500 an hour, just depending on the level of expertise. If you're looking for something like monthly bookkeeping, we actually have a special going right now. We're going to be taking probably 20 clients at 350 per month, where we'll do the monthly bookkeeping for you.
Okay.
You work with an accountant to get your books set up and train you on how to manage that properly, right? So we
Right.
offer service. It's a one-on-one where you'll be working with my accountant. We'll get your books set up. We're going to go on a Zoom call with you for 2 hours, and we're going to go through everything that you're looking at, right? Because you can set up your Wave apps, but if you don't know what you're supposed to do every
Mm-hmm.
single month or what to look for, then you're kind of just still blind, right? So even if you already
Right.
have it set up for you, you can set up a call with an accountant and pay them on an hourly basis to more understand what you have in place, or to actually design some things out for you. So you can always work on an hourly basis, or you can figure out what like monthly packages are. So typically they're going to be at least 350, maybe average like 500, depending. That's for businesses that are under like probably cap out at like 100,000. So if you're over 100,000, you're gonna. So typically, let's say if you're at $100,000, you should expect to spend about $1,000 a month if you're looking for somebody to manage that for you. If you're
Okay.
at 200,000, then you'll be late, and it's normally like a 1% ratio, right? So 1% of 100,000. Do I have where's my other phone?
I have
Let
a
me see.
question too when you get a chance.
Yeah, go ahead.
So my question is, so for someone who needs to go back in months to have you take a look at their books, how much does something like that cost? Or does
Hmm.
your firm do that as well? What is that called?
Yeah, so that would be considered a cleanup. And how cleanups work is we'll, get your bookkeeping system set up. set up your chart of accounts, and then load in all of your bank information. So now it can be a mess because a lot of people don't have that separate bank account.
Okay.
Fingers crossed you at least have a separate bank account, or you have your business credit cards, right? So the transactions are already separated. So we'll load in the whole year and do what's called a cleanup for that. And I believe so. We were doing like I said, typically it's $500 a month, and we were doing cleanups for $250 a month. For each month that has already passed, and then
Okay.
for the months that are coming, it'd be $500 a month, because you also meet monthly, so that we can discuss what you should be doing in that month. If you're looking to make some investments, right,
Mm-hmm.
that's your opportunity to say, hey, I'm thinking about buying a car. What's the best way for me to do that? Or I need to buy this really expensive piece of equipment. Should I do that now? Should I wait till next year? Or maybe you had a super big month last month, and you made 50,000 last month, and you're like, holy shit, I'm gonna have to pay all this taxes on this money.
Right.
What do I need to do? Right. So
Yeah.
having somebody that you can tap into to ask those questions to is super, super invaluable. I'll tell you guys about one of my clients. She started learning how to trade. So she was
Mm-hmm.
trading options last year, and I don't know if it was just good luck. She hit a good lick, but she
Ooh.
made like 85,000 unexpectedly.
Oh, wow.
So became really successful trading options. And when it's time to look at your tax bill, when it's time to look at your tax bill, you might owe 35,000.
Yeah.
You might owe $40,000. You're gonna owe taxes on that additional
Mm-hmm.
money that you made. And if you weren't planning for it, and you were just spending at the time, when it comes time for taxes, you're not gonna have that money. So had she talked to me about, hey, I had a good month last month, I made $10,000 in options, the first month, I would have been like, okay, well, look, this is what we need to do. You need to
Mm-hmm.
open up a Roth IRA, put that money in there, and trade in your Roth, and now that money becomes tax free. All those gains that you have become tax free, and
Boom.
you don't have to worry about taxes on it, right? Super simple strategy that you
Yeah.
know, and it takes 5 minutes for you to pick up the phone and call me. You know what I'm saying? So that's really the value of having somebody that you can get on the phone with and ask these questions to. Because after the fact is after the fact. Once the month closed, once the year closes, it's not a whole lot that you can do to go back and implement. You have to do it proactively and beforehand.
Right. Well, you have definitely taught us a whole lot in our little 50 minutes that we've been online. I definitely
50
want
minutes
to.
on.
It's been 50 minutes. I know, but the conversation has been really, really good. I'm definitely going to grab all of your information and put some of your links down in this. I'm going to save this live and I'm going to post it or whatever, but I'm actually going to get all your information and put it down in this. I'm actually going to add it to my link to bio. I'm
Okay.
gonna add it in my link in the bio or
Oh,
whatnot so
super
that
dope.
people can go right in and actually go right to your firm, go right to you, ask questions, get the information that they need because it's super important, especially for this community. And I'm so happy that you joined me today. I know you got
Yeah.
the baby and everything. I don't want to take too much of your time, but thank you so much for being on with us today. Well, I'm saying us. I am the audio person, the background.
Right.
But I'm
No,
so super
and so with the
appreciative.
one last thing I want to leave you guys, because I do know that the beauty industry typically, I mean, a lot of just my artists, right, the artist clients, no one's thinking about retirement.
Right.
Nobody's
You're
thinking
right.
about so, find you an advisor, a financial advisor, find you an accountant or somebody that you can trust. Typically, financial advisors don't even charge up front because they make money on the products on the back end.
Mm,
So if you want to figure out what your plan is, number one, you're not paying into Social Security.
mm-hmm.
So unless you're on payroll, right? You're not really paying the Social
And
Security.
that's gonna be gone in a little bit anyway.
And they saying Social Security is supposed to be gone in less than 10 years.
Yeah, yeah,
That's what they
yeah.
say. Hopefully. So that's the thing. If we're properly paying our taxes and paying our debts and stuff, and if they invest like they should. So I actually come from the defined contribution investment consulting space. So like I was working in retirement plans where companies had pensions. So back in the day, people used to have pensions
Mm-hmm.
and social jobs don't offer pensions anymore. If you can get a pension, it's
No.
very far few, right? But a pension essentially is your retirement plan that pays you every single month. It's like an annuity for retirement. And jobs used to give that out. Nowadays, you have the 401k and you have to save into it yourself. But if you don't save into it, then you just don't have money. You got to collect. You
Right,
got to
right.
collect Social Security. But put some money away for your retirement, right? Start off, you can get you an IRA or a Roth IRA, a traditional IRA, or a Roth IRA through any of the brokerage firms, TD Ameritrade, Fidelity, Betterment Financial has one. So like there are plenty of places that you can open an IRA, and the maximum that you can put in a year is like $6,000. So it's not a whole lot.
That's not a whole lot, yeah.
you know. But once you get to the phase where Queen Tiana is, where she's got payroll,
Yeah, payroll.
right? You
Payroll.
going, you can actually start a solo for. If it's just you, you'll have a solo 401k, and you can put up to $56,000 in your solo 401k every year,
Oh, I'm gonna be
tax free.
calling you. I'm gonna be calling you.
Yeah, well, I don't do solo 401ks, but I
Hmm.
have companies that I can recommend to you,
Yes,
but that would definitely be like a strategy that we want to talk about short-term and long-term goals. So don't neglect your future self. You guys are working super hard right now, and this is not the work that you're not going to be able to do this work in 50 years.
right.
So make sure you're planning to protect your future self by putting some money away for yourself now, even if it's just $500 a month to get your Roth going, and then figure out how to invest later. But at least just put the money.
Do you have my last question. Do you have like a recommendation for a financial, specialist or someone off the top of your head that does a really good job?
In as far as what, like as far as helping you open up the account. So
Financial advisor.
right. So I'm a financial advisor as
Oh,
well.
what?
Definitely comes to that, right? I make money on right. So we'll do like a fee-based financial plan. So I don't make money on products. So when you're finding a financial advisor, there are two kind of people. One is going to make money on products, right? And they're not going to charge you a fee to work with them up front. Or you will pay a fee up front, but I don't make money on you for the rest of my life, right? Because
Okay.
I recommend products and plans that are going to work for you and be most cost effective. So therefore, I'm not worried about, having your assets under management. You can go to any firm that you want to go to and open up your retirement accounts. But I do know some other folks as well. I'm not licensed in every state. So depending on what state you guys are in, you want to find someone that is licensed in your state that can open the accounts for you. But you can literally, like I said, go to TD Ameritrade. You can normally go to your bank. So Chase, the big banks have investment sides to it. Chase, your Wells Fargo's, your I don't know, who do you bank with?
Navy
Typically
Federal.
Navy Federal. Yeah, Navy Federal. I think has an invest. I think they do have
And
IRA. Yeah,
Wells
yeah. I have an
Fargo.
IRA.
Yeah.
I have an IRA. I have an IRA with Navy Federal, but it's not in the market. So it's not
Mm.
attached to the stock market. So it's a very safe way to save, for now, if that's the way you want to go. But I would at least go with an investment bank like a TD Ameritrade, or, a bank that has an investment banking branch like a Wells Fargo or Chase, JP Morgan, Merrill Lynch, of course, is one. But, you've got all these robo advisors out here now as well. So, you just
Yeah.
there, and you continue to build and pick ETFs, or which is electronically traded fund, or you can pick mutual funds to put your money in, and that way you don't have to think about what stocks am I going to buy. You just put the money in,
Right.
continue to put it in, right? Because really the biggest thing is building that habit of putting money in every single month and just leaving it there, because literally that's your self-care for you in your retirement age.
Mm. That makes sense. That makes sense. Well, you heard it from Miss Shaniqua Nicole. I thank you again for your time. You have been excellent. We have dropped jewels. I'm just saying, for real, if you learn something, go ahead and drop like a one in the chat right now, because honestly, she said, thanks for the gems. That's the Trade Investor. You did an awesome job. Thank you so much. I'm going to be working with you for my businesses.
Awesome.
So I'm really happy that I was able to meet you live. But if you have any questions, look at her. If you have any questions, feel free. I will drop her links and you can hit her up. Go follow her at Money Maven
Money,
underscore club.
nope, just
Money
straight.
Maven Club.
Yep.
Okay.
You got to follow me on
Perfect.
Instagram at Money Maven Club. You can join the free weekly Money Mastermind at moneymaven.club, or just click the link in my bio. Everything that you need is there. Awesome.
All
Thank you.
right, y'all.
It's been great.
It's been great.